Welcome back, my friends. Get ready for corporate landlording by Wall Street. Corporate and institutional investors are preparing to become even bigger landlords. Home builders are sounding the alarm bells about demand for new houses. Demand for new homes is softening significantly. Traffic in model homes has thinned out a lot. And contract cancellations have spiked. The United States is teetering on the brink of a recession. And a record number of new houses are coming onto the market in many cities. Sensing that home prices are in free fall, home buyers are now pulling back from the market. But guess who is stepping forward to buy houses in bulk at rock-bottom prices? You guessed it, Wall Street institutional investors. Private equity, Wall Street banks, and corporate interests are gathering their cash. They want to bypass the usual home building food chain and make build-to-rent deals to buy in bulk from homebuilders and house portfolio holders. So, is this a good thing? Will it even work? Or will these moneyed interests fall victim to a further crash in the housing market? What does this mean for new home development? What does this mean for the future of the economy? And what does it mean for the future of the United States? But before we get into that, please press the like button and leave us a comment below. Please hit the subscribe button and hit the bell icon so that you are notified of upcoming videos. Get ready for the expansion of corporate landlording. Wall Street has purchased hundreds of thousands single-family homes since the Great Recession. And guess what that means for rental prices? Home buying corporations are backed by private equity groups like Blackstone and Pradium Partners. These financial giants bought tens of thousands of homes across the U.S. Sunbelt. And these are detached, single-family houses. That has caused prices to increase more quickly in key Sunbelt states as compared to the national average. Analysts warn that institutional investors will control a large market share in housing within a few years. Specifically, institutional investors may control 40% of U.S. single-family rental homes by 2030. Some Washington lawmakers believe that Wall Street needs to back away from the market. What we're saying is don't have private equity buying up single-family homes, said Representative R.O. Khanna, a Democrat representing California's 17th congressional district. Khanna is the lead author of the Stop Wall Street Landlords Act of 2022. What's outrageous is your tax dollars are helping Wall Street buy up single-family homes, he said. The single-family rental industry got its start with government backing. Originally, that was in the fallout after the 2008 financial crisis. It was that rare opportunity that attracted the institutions to build a portfolio out of these foreclosed properties, said Stephen Shao, professor of finance and managerial economics at the University of Texas at Dallas. Since the early 2010s, financial giants have bought in Tricon Residential, Progress Residential, American Homes for Rent, and Invitation Homes. They have each bought thousands of homes. They've also added to the housing supply in some cases with built-for-rent communities. Some of these companies are financed by private equity firms, like Blackstone, and investment managers, like Pradium Partners. It's almost a captive market, said Jordan Ash, Director of Labor Jobs and Housing at the Private Equity Stakeholder Project. They've been very explicit about how people are shut out of the home buying market and are going to be perpetual renters, Ash continued. These calls come after fierce housing inflation hit many Sunbelt states, including Texas, Florida, and Georgia. The prices in their Sunbelt markets have outpaced national figures for rent inflation. Between January 2020 and January 2023, rents for a two-bed detached home increased dramatically. 44% in Tampa, Florida, 43% in Phoenix, and 35% in Atlanta. That's compared to a 24% increase nationwide. Industry advocates argue that they do not control enough market share to dictate prices in any market. Large institutions owned roughly 5% of the 14 million single-family rentals nationally in early 2022. By 2030, the institutions may hold some 7.6 million homes. That is more than 40% of all single-family rentals on the market. In the short term, however, some companies may retreat from the real estate market. They are nervous as correction concerns mount. You will see some selling bias, said John Gray, Blackstone's chief operating officer. Institutional housing investors, largely, the commercial banks, private equity, and other financial entitles. In 2021, they bought nearly 1 in 7 homes sold in the 40 largest U.S. metropolitan areas. In the first quarter of 2022, Investors comprised between 1/4 and 1/3 of home sales in important markets: Atlanta, Jacksonville, Charlotte, Phoenix, and Miami. These trends are worrying, researchers and advocates stress. Corporate landlords are more likely to evict their tenants and raise rents more aggressively, and shirk responsibility for basic maintenance and repairs. There's also evidence that some investors have been targeting homes in black neighborhoods at disproportionate rates, accelerating gentrification. That puts homeownership for some families further out of reach. Defenders of the sector point to research showing that most people moving into single-family rentals share similar characteristics. They are poorer, younger, have worse credit, have larger families, and are more likely to be single parents than their home-owning counterparts. One study estimated that 85% of single-family rental residents would not qualify for a mortgage. Taking away these rental options, advocates warn, would just take away more spacious living arrangements for younger families who can't yet afford to own, or might not want to even if they could. Others say the focus on Wall Street investors is largely a scapegoat to avoid wrestling with the real culprit of the housing crisis: the dearth of available units. Work from home has increased home prices by 15.1% since late 2019. 3 Democratic House members from California introduced a new bill to slow home purchases by institutional investors. Senator Sherrod Brown said the bill is focused on predatory investors and landlords. U.S. Representative R.O. Khanna said he doesn't see his new bill as a comprehensive housing solution. He says that lawmakers need to focus on fighting barriers to new housing construction, increasing housing supply, and expanding down payment assistance. But we don't need to be subsidizing institutional investors, Khanna added. They go buy up housing in working-class neighborhoods and holding them for appreciation and turning them into Airbnbs, Khanna also said. You could make an argument that it was necessary to subsidize Wall Street investors after the 2008 financial crisis when the market collapsed, but that certainly now has run its course, Khanna also noted. The goal of the new House bill is to deter future institutional investments into single-family homes by barring corporate investors from claiming certain tax breaks like the mortgage interest deduction, and imposing a transfer tax on the sale value of new single-family home purchases. Increased building costs have already led to a slowdown in investor home buying. Redfin also just closed its own home flipping business. Open Door Technologies, another online house flipper, which just posted record losses. But demand from institutional investors still accounts for 17.5% of all home sales in Q3. For now, institutional investor purchases have slowed, but experts expect their share of purchases to rise again soon. Home builders are looking to sell unsold homes in bulk to institutional landlords. And institutional and corporate buyers are raising funds of over $100 billion. They are preparing to pour billions of dollars into new build-to-rent communities. J.P. Morgan Chase has formed a new venture with a billion-dollar real estate developer. The partnership is morphing America's largest bank, America's largest landlord. This starts with thousands of U.S. rental homes. J.P. Morgan announced that it has formed a joint venture with Haven Realty Capital. The joint venture will purchase and develop entire communities of new homes. It is starting with 3 communities in the Atlanta area. J.P. Morgan's injection of capital could increase that portfolio by 70%. Haven founder Sudha Reddy says that now is the time to invest. But, if you follow this channel, you already know that big home builders are losing confidence. D.R. Horton, the largest U.S. homebuilder, shared more details in its Q3 earnings call this week. But, what do you think? Please press the like button and leave us a comment below. Please hit the subscribe button and hit the bell icon so that you are notified of upcoming videos. Please share this video on social media. Thank you for watching.